Eric Mwatha with Mwatha.com with another mentorship video. Let's take a look at the biotech space, which we have been discussing all day. And your question to me was, so do we buy now that the biotech space is seeing a big drop today? And let's take a look at today's drop, about 3%, 4%. And this is a sizable drop. You can see this is the biggest one-day candle or one-day move, and the reason why is because the daily RSI is moving below 50 today, and that's why you have this big drop. Now I want to explain something else. Is if we go back to the weekly, we are also seeing a sizable drop on the weekly time frame. Why? Because the weekly is also moving below a critical threshold of 69.10, as you can see here. So you combine the weekly forces pushing the market lower and the daily forces doing the same thing on the 50, you get a big drop. So the question is, what do we do now? And the best answer I can give you, and actually, by the way, let's take a look at this stock here in the biotech space. This is a stock that actually started to give me some sense that the space was extended. Now, why would a stock do this? In fact, when I made the video about this stock, it was trading at about 119, and I made the comment that the stock was exhausted and more than likely due for a pullback. Now, I'm not trying to say that I am absolutely never get it wrong. I am the best technical analyst in the world, even though, to be honest with you, I do believe that. But that's besides the point. What I'm trying to, it was a lucky call. It's a lucky call to time this thing, because if you made the call here or here or here on the way up, you would have been wrong for a couple of days, but now it's below all these points. So really it was a lucky call, and the last thing anybody wants to do is try and time a market that is either on a free fall or on a hyperbolic move, because you don't know honestly when this is gonna end, because it could be that it was gonna stop at 140, 133, who knows. So it's always hard to make the call, but what I'm trying to get at is this move here was very hyperbolic, due for a pullback, to be honest with you. And if we take a look at the monthly, I mean, this is how many months? 1, 2, 3, 4, 5, 6, 7 straight up months. Now that's an extended move. So I thought that this was indication that the biotech space was too frothy and due for a pullback. So the question is, what do we do now? And so let's go to the biotech space and take a look at, do we buy this pullback? And my answer is, let's wait for evidence, or like I told you, let's wait for the dust to settle down, and we need to figure out where we can go long. A couple of easy identifiable areas is around the 50 as one point. If the market, one option is if the market finds support around the 50 level with uniform activity, then you can take an opportunity to go long. Remember, we had a nice double bottom at the 50 level there, which is somewhere here. So we are looking for the market to prove something of that kind of technical observation. We had also another support at 50 here, which was this lows, and again here, which was this lows, and uniform activity below 50, back above 50, which was those lows. And so you can even see that this, generally speaking, was a move below 50, back above 50, with what looks like a U-type formation, which was here. So we are looking for something like that, or this move below 50 and above 50. Uniform action looks like a V, which was this entrance. All of them were successful. So if we are going to be neutral, we have to be vigilant around here for this type of action. So that is one thing I'd look for in terms of waiting for the dust to settle before looking for opportunities in the biotech space. Another option, so option number 2, is to draw a line connecting the lows like that to see whether the market can bounce on that line. Right now this option is not taking place, so option number 2 for support on the daily lows is off, so that will not work. Let's take a look at option number 3, which is the one I like the most. So number 3, we need to determine where this move began. You can see there was a nice low here that brought the instrument to these highs. So nice entry there. So we can use this low, which is this RSI movement, somewhere around here. And to be sure, this RSI movement corresponds with the low there. So we take that information on hindsight that was successful, but we can use it for future action. Draw a simple straight line, and the market is confirming that this is the best approach in my opinion, because you can see that it has been used before by the market here. It touched that line, kissed it, and moved higher, which was this nice low, and from there you can see the market did move higher. So if we find the market bringing the RSI here and making something like this uniform action, either a double bottom or maybe some type of a U-type formation, or maybe a sharp V-type formation, any type of uniform action, any type of symmetrical action on the line that shows support is indication that that is where you might start looking for long ideas in the biotech space. Now let's test this line, and the way you test the line is to go backwards to see if the line makes sense, and we are going back into time, and we can see that yes, even going backwards, it was a nice low here on this RSI on the line, and again we see that it is perfect entry here, which is off the lows there. And you might be able to see this or not, but I'm going to show you another. Let's get this right here. So right there, there's a small low on the line, on the green line, which is this nice low there. So the line is legit. So to answer your question, where do we start looking for opportunities? The opportunity is clearly on the line that I just drew off this entry here. If the market can come back here with uniform activity and bounce, that is where you might take an opportunity. For now, you have to be patient. Keep in mind that this, if it is going to find support, it's a big if. We don't know. It might come here and crack. So instead of support, it could crack, which is a problem. But we can see that if it holds, it would also coincide with support around the 50-day moving average. Not at the 50, but around it. Just like it was support around the 50 here. Support around the 50 during all these periods. Okay, so if it comes here, and if it finds support here, and if it confirms support, if it does, then we can look for opportunities. If we don't see support, then we do not take the trade. Now, I want to combine this by taking a look at the weekly, because it's always good to consider all time frames, and we can see that there's a couple of reference points. If we take the most recent obvious lows, draw a straight line on the weekly, you can see that if it bounces on this line week to week, that is where you want to go long, because that would suggest that it wants to move back above 69.10, which is where it's been very strong. So if it can find support on the blue line connecting the recent lows, and I'm talking about this RSI low and this RSI low, if it can find support there, that would be indication that it is stabilizing. Keep in mind, if you consider that it has been staying above 69.10 throughout this period, which corresponds with, so this entry here in price to now, that it to this time period, now that it has moved below 69.10, as you can see this month there. So the RSI has generally defended that level and has been holding above 69.10 during this very profitable run here. So my thinking is, if the line holds, if this line holds, it could be indication that the stock wants to trade back above 69.10. So that's another consideration week to week. Otherwise, we'll have to wait and see how things settle out on the daily. Just one more observation is, if we take a look at the hourly, we can see one of the reasons why I thought, and I wasn't sure because it was just an observation, at the highs, RSI on the hourly was making a lower low, as you can see, over a period of time, while the prices were making higher highs. And so when I made that call that Biotech was gonna stall, it was somewhere here, somewhere in this region, because as you can see, it wasn't just my thought that, you know, out of the blue. I was actually using this hourly chart to show that if it was continuing to give negative divergence, that maybe eventually it breaks. And that's exactly what happened. So on this hourly chart, there was a chance of drawing a simple straight line, which is this level here, corresponds with these lows on a short-term basis. If the market had found support here, if it had bounced right there with uniform action, that would have been a place to consider going long, but that has failed. So you cannot use that uniform action. There's none. So that right there is an example of what happens when you're expecting support and it fails. It has failed here, which might explain this drop. Now this is 3 months worth of data. I want to go and take a look at 6 months worth of data to see where earlier ideal entry points began. And there's an ideal entry point here in October of 2014, which corresponds with this RSI movement above this declining short-term level. So that entry there was good to move that market to higher, to new highs, as you can see. So we take that information, draw a simple straight line like that in anticipation of support. But what we see now is that there is no support right now. It has actually failed. So there's no buy signal here. In fact, it probably is a short-term sell signal. And we know that this should have been support because the recent lows on an hourly basis have been coming to this green line and showing support. Even here. And again here. So now what is taking place in the biotech space is slightly different, because what should have been support has now failed. Hope that makes sense. Go back to the 3 months hourly. Earlier during the week, I had mentioned that if it fails to hold this support line, the support line that held the recent lows, and it was trading somewhere here, I had mentioned that if it fails to hold that support line, and I'm talking about this support line, then that break would be a problem and might explain this downward move. So let's just conclude by taking a look at the individual stocks, because every stock is going to trade on its own energy. So ESPR is what I was trying to type. And what you see here is, here's a stock that is really now coming down after that hyperbolic move down about 15.5% down. And we can see that there's a couple of things if you are watching this. Simple line connecting the lows. If this holds on this line, maybe there is support. That's one thing to consider. Otherwise, if it breaks that, that's a problem. So if you're looking to own this stock, if it holds on that line, you can consider going long. But my thinking is the move actually began somewhere here, this ideal entry point. Believe it or not, the stock was trading at about $15, $16 in September of last year, and since then it has seen a very sharp move in a couple of months. That is unsustainable in my opinion. But we see that the move did begin during this RSI movement. We can call it somewhere here of these lows. And so if we draw a line around the 50, which makes sense because ever since then, let's draw the green line to be consistent with the color. That green line has been where it's been coming with uniform activity and showing short-term lows. And recently came close here, which was this lows at 45 before it jumped all the way to 120. Now, what I'm getting at is if the stock can come back to that level around the 50 and show any type of uniform action, it could be a sharp V-type uniform action, it could be a double bottom, it could be a U-type formation, it could be something like that. Any type of uniform action showing support around the 50 is where you might consider taking a position. So the dust has not settled on this one because it hasn't given us a daily reason to see support. You have to see support before you act on it. Let's take a look at the other stock, which is one that you own or did own. It is down about 10%, and you can see that the move began off this lows. This one is easy to see, off these lows. Number one, take a look at this break on a daily chart. It broke down, I believe, yesterday, and that was your warning signal that it was not looking great. In fact, because we'd been talking about biotech, probably would have been a warning sign on hindsight. But once it broke that red line support connecting the lows, once it broke that level, you knew that the stock was going to be in trouble. And that's exactly, as you can see, what has happened. We broke below that, and now it's on a free fall. Now, where would you find support on this stock? Let me draw two lines. Remember, we are looking for areas where the stock could find logical support. If we take the lows and this low, draw a simple straight line, if it can bounce back above this blue line with uniform action, so let's say as an example, if it can find a V-type formation like that, which is back above the blue line showing support, then you would use this period here to go long, or at least have an excuse as to why you should hold. But I don't think you have an excuse to hold, because if you are more than 8% down, you need to get out, or should have gotten out before this 8% maximum loss. So that's one thing to consider, is if it can jump back above this line with uniform activity, maybe there is hope. Right now, as you can see, if we are to be neutral, it is breaking down. All right. Now, there is, as I was beginning to say, a nice entry off the lows here, which corresponds with this RSI movement when it broke out on the RSI there. So we use that information to draw a simple straight line, which is exactly where it's trading. So again, to repeat the thesis, if the stock can find uniform activity on the line, if it can do that, then that is exactly where you go long. So you watch that. It's also trading around the 50-day moving average. If it can hold that line, and especially if biotech is giving you any excuse that biotech is bouncing, then you can take a position. Otherwise, this is a risky hold at this point, because what happens if there's no support on this green line? Then that just suggests even lower prices. Let's take a look at another, and this is one that I had given a short, because when it had made this low, it settled down for a couple of weeks, and the thinking was that if it breaks either this weekly closing low here or this recent weekly closing low there, my thinking was that a break of those, either of those, would have been bearish. And it seems like the market is showing yes, that is correct, that once we broke below those two levels, so this weekly closing low was breached this weekly closing low was also breached, so that's a problem. And I hope you can see that weekly closing low right there. We have 2 weeks to the upside, and then we break down on week number 4. So that to me was, I wouldn't want to say easy, but once it dropped below that, that's why I sent you that text message, I think on Monday, that it was breaking down and it was potentially a short. We can see down about 14% for the week because it's moving its weekly RSI below 50, which opens up the possibility for a big down week net. We can see here that on the weekly it is also breaking, had already broken, to be honest, this line of support, connecting the lows on the weekly RSI here and this small node. So once we broke below that, then the stock was always going to be in trouble. Now this video was supposed to be 5 minutes long, but I guess I can't stop talking. But there's a lot to discuss here, and that's why we need to watch that. Now there's something else I need to mention, is this stock was a buy, if you remember, for us during this move here. And if I am wrong, then we got this, because I might not be a little bit accurate, definitely during this second breakout is when we went long, and the stock did well after this breakout right here. You can see that this move began right here, and so we can also draw a line. This is where the stock needed to find support, and as you can see, as of right now, what should have been support has become resistance, which might explain this drop. So there's a lot of information on one single chart, a lot of information. Now there's something else that I want to discuss here, because I see it right now, is if I draw a simple line connecting the previous breakout and extend it. Now this line here, if for some reason the market can show support on this line, then if it can show support on this line on a weekly basis, that would be where you might take a position, because this line has been very instrumental in keeping the stock trading well. So I'm talking about this line that I'm drawing in black now. If the market can find support here, the line was very good for the stock, because once it moved above the line here, it had this nice entry on a breakout level to these highs. And so now maybe the stock is back testing that line. If the market can hold on that line on a week-to-week basis, that is where you can consider a long position. So in other words, let me explain this. So this is the line here, so I'm explaining this line here, and the thinking is that, so it looks something like this. Once we broke out here, which is this entry, and for a very successful move, by the way, is if we come back in the future and show uniform activity on this line, let's say something like this, and start moving higher, you want to go long at this back test. And so I'm talking about extending the line, and if we see any type of uniform activity on the line, which would be this particular example, then you'd go long. I hope that makes sense. So that's another way you can look at this particular situation. Otherwise, if you want to go to the daily, you can see that the move did begin. Either you can take either this low, which would be this RSI movement here, so draw a simple line, and it is exactly where it's trading. And one of the reasons I have to mention this, that the stock is down a lot today, down 8%, is because it is moving its daily RSI below 30.90. So that's something to watch. I can also see that. So this was the entry on hindsight, which was this low, and since this lows here, the stock has had a nice run. So we can use that information to find support. If the stock can bounce above this green line now that it has come back to the ideal entry point. If it can bounce with uniform activity back above the line, maybe you can consider a risk trade. Short term though, the stock is a little bit broken because it broke support here. So this support on the daily RSI was a red flag. It also broke support here, another red flag on the price, and also that wedge, or I guess I can draw it this way. So lots of break points on this stock, which is not good. Now there's another way you can look at this, and I just want to point this out because it's an educational video. I know they are lengthy, but there's so much to cover. This entry right here, this RSI entry, was also a nice logical low, and since this low the stock had a nice run, absolutely amazing run. Anybody would want to be part of this move, right? So we draw a simple straight line. Should the stock had come back here and given us uniform activity, which is exactly what it was trying to do during this period, which was this support zone, but now it has failed. So what would have been support has failed, and we can test this green line by going backwards, and you can see that even here it held support and it had a nice move for a couple of days, maybe a couple of weeks here. So the line is legit, but we already broke through that line, which might explain why the stock is almost in trouble here. So yet again we see that there's many ways to look at stocks. The key, which is the reason for this video, is the Biotech. We go back to the daily. If you want to own Biotech, watch the bounce, potential bounce around the 50 as one way. Okay. Also, we are drawn the line coming off this lows here. So if it ever comes back to this line, maybe there's a chance for a bounce, but it needs to hold with uniform activity. It needs to trade well around the 50-day moving average. I can also draw another line connecting the lows like that, and this blue line connects this low, RSI low, in fact even connecting to this low, so I can extend that line this way. It connects those lows, this low, that low, through here, recent lows, and so you can see that the stock has a price target somewhere around the 50, somewhere around there, and we need to see uniform action on both two lines, the blue line there and also the green line. If it can bounce on those two lines, then this is logically where you'd want to go long for a short-term swing trade. I know the video is a little bit lengthy. I apologize for that. Eric Muade, good luck, peace, and blessings. But before I go, one more thing. Sorry. Because the RSI is moving below 50 today, don't expect any bounce. Generally, when markets are moving and they've spent a couple of hours below 50, generally they do not bounce. And the same thing is true, for example, when markets are moving above 50 like they did in this time period, you can see there was a big day-to-day move here. Conversely, when they are moving above 50, there is a reason for mathematical strength. And so today we are seeing the mathematical strength pushing the market lower. So this is the type of day where you do not want to buy, maybe if it's into the close, but today is confirmed down day because of this move below 50. Whenever you see that, you just have to stay on the sidelines and look for hourly charts, maybe to confirm that there's a bounce towards the end of the day or into the new day. If it's down for the week, expect a big down month. If it's up for the week on the RSI above 50, expect a big up week. And the same thing on the monthly, above and below 50, you get a big monthly swing. So watch the 50 levels on your monthlies, weeklies, and dailies and hourlies. I know. Eric Muade, good luck, peace, and blessings. Woo!